Hello again. Now we can say it since that's the second video. Okay, so you're probably wondering what the hell is all of that? So, as I said, I'm gonna explain the whole ICT concept, everything that you need to know about ICT in the next video. Where did I learn everything? Just simply YouTube, T trades, TGR, ICT, everything that I said in the previous video, which was the introduction. So in that video, I I classified ICT concepts in three different parts: PD arrays, liquidity, and models. Those are the three main things, and those are the things that we're gonna discuss. Okay, so this video is probably gonna be a bit long since I'm gonna talk about everything here, so we can take a fresh start in the next videos. I'm not sure yet, but probably the models are gonna be in a different video. I'm just gonna start with PD arrays, then another video about liquidity, then another video about models. So let's start with PD arrays. Let's get on the charts. Oh, Leah Swanee. Okay, so that's the charts of TradingView. That's today market. Let's just hide everything. I don't care right now. Okay, so what is a PD array? Okay, so PD arrays are levels in the market which I have interest in, like areas in the market that I would like to take a position of. For example, let's state with support and resistance. We're not trading support and resistance, but for example, this area is a support area. So I'm gonna call that a PD array, an area in which I find the interesting or a point of interest in which I would like to take a position of. Okay. So in ICT concepts, which PD arrays do we need? Okay. Let's start with fair value gaps. So what's a fair value gap? Okay, first take a look to the candles. The candles consists of wicks, bodies. How does a candle form? Okay, that's gonna be very quick. Okay, so a buy candle starts from here. Okay, again, starts from here. A sell candle starts from here. Okay, so can this candle with this wicks explains the whole history for the past 1 minute that this candle formed. So the candle opened here, went a little bit to the downside, then went to the upside, then retraced a bit and closed here. This is the full story of the candle. Okay, what about the sell candle? The candle opened here, went a little bit to the upside, then printed to the downside, then retraced a bit to here. Okay, so now that we can understand how candle forms, let's understand what's a fair value gap. So a value gap is an insufficiency or imbalance in filling orders. So I'm not gonna dive really in that thing, but let's say the market is about orders. So the price here is 95, 96, 98. All of those are orders. People have long positions here or sell positions. So there is amount of contracts here that you can buy. When it's finished, market bounces to the next bid, which is the 5, then the 6, then the 7, creating this big move. So when a lot of long positions are in the same, like in the same zone, they create this huge imbalance, big gap. This what we call a fair value gap. Okay. Um. So how does a fair value gap appears in the market. Wait. So you will see a candle, a candle, and a candle. The gap between those candles is the fair value gap, the imbalance between them. If you have a wick here, you use the candle, you use the fair value gap from the wick to the wick, if there is a wick here too. Okay, those levels act like support and resistance. Okay, as you see, this is a big 1 minute gap. Market displays to the upside, the trace to it. This is a point of interest that we want to long of, and then it goes up. That's basically what a fair value gap is. We have two types of PD arrays: high time frame PD arrays and low time frame PD arrays. I'm gonna talk about it later, but let's say that high time frame PD arrays helps us identify the move, like when are we gonna reverse, but the low time frame PD arrays helps us to take the entry, like the action. Okay, that's simply what's a fair value gap. Okay, so the second topic is inversion for value gaps. So basically, it's a fair value gap that got created, then the market displays very, very hard, crushing this fair value gap. That's an inversion fair value gap. A fair value gap that got disrespected. Here's a great example. That's an inversion fair value gap. So an inversion fair value gap aligned with a fair value gap, giving us a very strong zone that we can long of. Another name ICT calls it when you have a fair value gap and inversion at the same time, like this, with no wicks, nothing, everything aligned perfectly. It's a BPR. But let's just say inversion and fair value gaps. Okay, that's pretty quick at it. What is it? Okay, market structure shift. So a market structure shift is when market is creating high lows, high lows, high lows, high lows, then breaking the previous high, shifting to the uptrend. That is what market structure shift is. Market is going in a downtrend, breaking the previous structure, and then switching. Okay, let's see an example. Okay, let's just go a bit up. Okay, so market is going down, down, high lows, high lows. This is market opening, then consolidating, high lows, high lows, high lows. Then what we see here, oh, breaking for the previous structure. What happens after that? Market is going up. That's basically what a market structure shift is. Okay. Um, it happens a lot. It's not always means a reversal. You have to align it with other confluences. Next, breakers. What is breakers? So a breaker is when a market structure shift is created like this, and this area, the previous this exact zone, like an order block. You don't know what's an order block yet, but this area is the breaker. It's like a support area after creating the market structure shift that allows us to long. Okay, let's find a quick example. Okay, that's a breaker. Okay, market goes up, sweeps liquidity. You don't know what a liquidity is, but let's say you know. Okay, so market creates a market structure shift. That's a breaker. See how market reacts of it? That's a breaker. That's a 5 minute breaker. Okay, that's a quick example for what a breaker is. For example, another breaker here. Yeah, they're not perfect, but yeah, that's what we call a breaker. Um, yeah, sometimes they're gonna get disrespected. As I said, you always have to align it with other conferences. Yeah, here another one. Okay, creates a market structure shift, then retracing to the breaker, then going up. Yeah, that's basically it. Order blocks. Okay, so what's an order block? An order block, we can call it as an area in which market would like to tap and reverse from it. But it has to have like a certain appearance. I don't know how to explain it. I'm still bad at explanations. Okay, so let's take a quick look about an order block. Mm, yeah, wait. There was a good one like a couple days ago on the hourly. Yeah, here. Okay. So this candle closes above with a bullish candle. This creates a CISD or an order block, change state of delivery. This that's an order block in which if we take a look in a lower time frame, we can see that market respected it a little bit. Yeah, when we tapped something here called CE, we bounced around 50 points. Okay, I wanna have a clear. Okay, let me get a picture because I can't find a clear one here. Yeah, for example, that can be an order block. See, it's a candle that we close below and we displace very hard, then we retrace to tap in it and just print down like this one too. Yeah, that's basically an. Okay, let's get back. Rejection blocks, which is very, very, very important topic in which I'm gonna explain with details in the next video. So a rejection block is, let's say that's a big candle dropping really, really hard. Then due to of a bullish momentum, it retraces very, very hard, creating a very big wick like this one. This is called a rejection block, in which we can later use it as a confluence or a PD array. Let's see an example. Okay, so for some reason, I'm not gonna say it right now, we had a level around here, 8, here. But we have the levels here, we have everything aligned here, we have the liquidity, we have everything. But we're not sure, should we short or not? So once we tapped, we created a rejection block in which you can just enter of it or you can enter of the 50% of it, which I'm gonna explain later, giving you a very, very tight stop loss. I'm not sure. Wait, like, yeah, giving you a very, very tight stop loss in which you can just print all of that to the downside. Okay, so yeah, this is basically a rejection block. That's a low time frame one. I'm gonna dive through it in a lot of with details in the next video and explaining the whole idea about wick theory. Um, let's see another rejection block. Yeah, for example, this is a high time frame one. That's a 1 hour rejection block. Entering of the 50% of it, sweeping this engineered liquidity, printing 161 points. Yeah, that's what rejection blocks is. But you have to stack it with other confluences. See, like this one, it didn't work. You have to stack it with other confluences. But it allows you to bottom tick the market. Okay, next it's gonna be equilibrium and SMTs. Okay, basically what equilibrium is, what we're just using right now. Okay. Okay. 75, 50, and 25%. This 0.5% is the equilibrium level. Okay. So let's define the idea of premium and discount. Okay, so the whole idea is, let's imagine you going to buy something like a phone. So if you want to sell it and make profit out of it, are you gonna buy it while it's expensive or while it's cheap? you're gonna wait for a discount. Like if it's worth for uh 1K, oh my god, never mind. If it's worth like 1 grand, you're gonna wait till it's 800, then you buy it. Then you wait till it comes back to 1 grand and sell it for 1 grand and make the $200 profit. That's the same idea with trading. This is the market premium and discount. The zone below 0.5% is the discount area in which we look for buys. The high area is the expensive area in which we look for sells. Okay, so after all of that, how can we implement that in our PD arrays? So, for example, you have that PD array. You would like always to use the 50% of it. Not always, but I'm gonna show it in the models. But for the wicks, rejection blocks, fair value gaps, order blocks, you would like to use it from the 50%. For example, this one, if we use the 50% of it and we went to the 5 minute, we're gonna see. I wanna dive to the 1 minute so I can see it perfectly. Mm, okay. You can see the 50% of it still leave bottom ticks. So what is the usage of equilibrium? Helps you to identify your bias, which is either buying or selling, and helps you um, use the PD arrays correctly to get the very precise entries. What else? Yeah, SMTs. Let's get a good example of SMTs. Okay, so we need first ES. No, thank you. Yes. Okay. So something you need to know is that NQ and ES moves together, but sometimes one of them are stronger and sweeps liquidity while the other don't sweep liquidity. So you have always to keep your eyes on both of them, checking for SMTs. So for example, if NQ swept that high and printed down, while ES didn't sweep that high and printed down, that's a bearish SMT. That's an SMT you would like to see while searching for sells. If NQ swept the low while ES didn't, that's a bullish SMT and an SMT that you would like to see while buying, and vice versa. So let's see a live example for that. So that's the same day. That's the high. Okay, can you see that's the same high here? I'm hovering on it. That's the same high. We swept here, we didn't here. That's an SMT we search for when we are selling. We swept. I had an entry after sweeping this high too. So win-win. You enter of it, then bang. Targeting the opposing liquidity, targeting the opposing liquidity. So you just need to stack confluences with this. Okay, that's pretty far everything you need to know about ICT and PD arrays, so we can start. I'm gonna make another 2 videos explaining liquidities and models. So this video won't be that long, and 20 minutes it's just actually good. Yeah, that being said, see you guys in the next video, and peace out. Don't forget to do your homework. Try to spot as many as you can of those confluences on the chart and screenshot it and put it in your journal on Notion. Yeah, that's it for now. Peace.